I'd like to begin this afternoon's address by thanking the prior speaker. There's basically nothing I could say that would depress you more. It's seldom that I'm regarded as the ray of light in a conference like this. It's probably instructive, however, or at least defines me well, that in a market where everybody else seems to be very depressed, I'm on my way to elated. Many of you who have heard me in prior Cambridge conferences know that my most frequent throwaway line is that in natural resources investing, you have to be a contrarian or you will be a victim. Most of us, of course, prefer to be contrarians when it's popular, a very difficult thing to do. The nature of that is, of course, somebody who is very aggressive in periods like 2006 and 2010. Which is to say, aggressive, but not a contrarian at all. Most of that aggression has been out of the market. The thing that struck me particularly listening to the speakers today, and I've had the good fortune to listen to several, has been the overarching gloom in this conference. The apologetic, not that some of it wasn't deserved, approach from the podium, which differs so dramatically from 2010. How many of you were here in 2010? That was great, right? There's nothing in the world like confusing a bull market with brains. Looking at your account statement and thinking that the credit total resembles your IQ. Not quite so much fun looking at the statement today, and one wouldn't want to confuse their debit balance with a negative IQ. But what I'm here to say is that we're in the midst of a bear market, which from the point of view of those of you who would like to make money over the next 5 years is an extremely good thing. You see, bear markets begat bull markets, and bull markets begat bear markets. Markets, in fact, work. They don't often work in the fashion or in the time frame that is convenient for us, but they work at any rate. We are in the midst of a ugly bear market, and in a bear market I feel that will at least feel itself like it will be of some continuing duration, and we'll talk about the extent of that duration and the cause of that duration and the nature of that duration later in this talk. But we are, in fact, in the middle of a nice, ugly bear market. And I say nice, ugly bear market for reasons that I'll explain now. Any of you at the San Francisco Gold Show, the recent San Francisco Hard Assets Conference? Well, hopefully you will have forgotten my speech, because this is going to be strongly similar to that. And I'm not as familiar with Vancouver geography as I should be. But I know if you walk out of the hotel that way, you come to things like Royal Centre and Pacific Centre and Robson Street, big retail shopping districts. So what I'd like you to do is I'd like to imagine yourself, I don't know, in Pacific Centre or something, and you're walking down the aisle, and on the left side of you, there's a great big sign that says 70% off, all items marked down, must go. Gigantic super sale, all goods discounted. And to your right, there's another sign that says, all goods, full price, all the time, no sales. What store are you going to go to? The one on the left or the one on the right? You're in a market right now that says 70% off, goods on sale, stronger sales to follow. In 2010, you were in a market that said, no sales, fully priced all the time. Prices will never be higher than this. And we prefer 2010 to 2013. Why is this? I'll tell you why. Because we all have too much inventory. The fact that the guy on the left-hand side is selling stuff cheap that we already own pisses us off. But you know what? Who do you think cares about the fact that we're angry? Do you think the store on the left cares that we're angry? How about the store on the right? Do you think that guy cares that we're angry? How about this junk inventory that we're carrying? You think these little stocks care that we paid too much for them? Nobody cares. The fact is that sales are the time that you buy. Sales are the time that you buy. This is one of the only businesses in the world where you get to buy inventory now on sale, and later on, when all of the mooches, like us in 2010, march in, you get to sell it back to them for more. And for some reason, we don't like this. We don't like this. People say to me, Rick, it's all very well and good. I'd love to take advantage of this, but I don't have any money. I can't take advantage of this. I say, well, do you have some stocks? Well, yeah. Well, why don't you sell some stocks and raise some money? I can't sell the stocks. Why? Because I'd lose money. No, you've already lost the money. The money's already gone. It's gone to money heaven. So what I want you to do, Mr. or Mrs. Investor, is look at your portfolio. Look at the top stock, Amalgamated Aardvark. Okay? Sell Amalgamated Aardvark. Oh, I can't sell it. I paid $2 for it. Now it's at 25 cents. If I sell it, I'll lose $1.75. I say, okay, if you can't sell it, then buy it. Well, why would I buy it? It's gone from $2 to 25 cents. Give me a break. Do one or the other. If it's cheap at 25 cents, buy it. If it's expensive at 25 cents, for Christ's sake, sell it and buy something else. Adult supervision. If you employ adult supervision in this market, you are going to make money. Those of you who have heard me speak at these damn conferences for 15 years know that I hate making a simple declarative statement. I'm the most hedged guy I know. I'm a pawnbroker. Let me say this again. If you employ adult supervision in this market, if you invest intelligently in this market, you are gonna make money. And if past is prologue, you aren't just gonna make some money, you're gonna make a lot of money. Think about how beat up you feel now. Think about how you feel compared to 2010, and understand that all of the people that you compete against in this market feel the same way. What level of competition do you expect to find in your search for bargains in this market compared to 2010? None. You are involved in a race. You're involved in a marathon. If you're my age and my weight, marathons are hard to run. But I can win if I'm the only guy in the race. And I'm almost the only guy in this race. So bull markets are good. Bear markets are good, pardon me. Let's look back at some of these market cycles. I don't know how many of you remember the bear market cycle, the 87 to 90 bear market cycle. I can see by looking at the gray hair or the no hair in certain circumstances that many of you should remember it, whether or not you care to. Remember that that kicked off a ferocious bull market, the 92 to 96 bull market. I mean a ferocious bull market, a tenfold bull market. The market, of course, went off the cliff in 1997. So there was the 97 to 2002 bear market, a truly dismal bear market, where my net worth skyrocketed. That 1997 to 2002 bear market was followed by a scorching hot bull market, the 2003 to 2006 bull market, a scorching hot bull market. As recently as 2008, the precipitous or psychotic break that we had in 2008 was followed by a scorching hot 2009, 2010 bull market. Anybody see a pattern here? Anybody see a pattern here? It is bear markets that set up bull markets. And the extent of this bear market tells you something about the extent of the bull market that's going to follow. What I really like about this market is I go through a thesis like this, and people say, Rick, I want to believe. Honest to God, I want to believe. But this is wrong, and that's wrong, and that's wrong, and that's wrong, and that's wrong. How do I know that there's ever going to be a bull market again? And I have to say, do you like to eat? Let's think about the fundamentals. Let's do the easy stuff. Do you like to eat? When it's cold, do you like being warm? How about cars and refrigerators and houses? Do you like those? And do you think other people in other parts of the world like those too? Because if what you are saying is that we aren't ever going to have another bull market, what you are saying is that the resource bull market is over. And my thesis is that the bull market in resources is very, very, very much intact. Hurt, but very much intact. I think that for a couple simple reasons: supply and demand, the two simplest of all reasons. Let's do supply first, and I'm talking in the broad base of natural resources. Supply in the broad base of natural resources is constrained, first of all, from the after effects of a resource bear market that lasted from 1982 to 2002. There were 2 decades where, as a society, on a global basis, we underinvested in natural resources, particularly in mining and oil and gas. And what's interesting about that is, remember that these are declining businesses. You can't go to the edge of an open pit mine, throw some fertilizer in, throw some water, and have it grow more copper. If you overinvest in a business that is a depleting business, you terminally deplete the ore body without making it up. And we are still in the oil and gas and the copper business and in businesses like that, living off ore bodies that are very, very, very long of tooth. In addition to that, although credit is freely available on a short-term basis, it is not very available on a long-term basis. So to the extent that mega discoveries are made, they are very, very, very hard to finance. There are problems, moats, if you will, around increasing the supplies of existing commodities, which is very bullish for prices. And unfortunately, there's a third thing that constrains supply, and that's theft. It's not the old-fashioned kind of theft that you're used to, good, honest theft, a couple of bad guys with masks and guns. This is very efficient communal theft. The fact is that governments worldwide want more rents from natural resources. Natural resource assets are very efficient to steal from because they're capital intensive. They have trapped capital and they're physically trapped. If us together, the group of us, owned a couple of freighters, and we came into Vancouver, and the Vancouver Port Authority, or whoever the goons are that run the port here, decided to double the fees, that would be okay. We'd just never come back to Vancouver. We'd steer the ship away. But if some tragedy like an NDP government befell British Columbia, and they doubled the resource rent, and you happen to have a copper mine in BC, how would you move the copper mine? So theft, communal theft in natural resources, is something that's happening on a global basis. And don't think it's happening in Mali and Congo and Afghanistan and places like that. How many people remember a few years ago when the natural gas price went up, what happened in the People's Republic of Albertistan, where that conservative government doubled the gas royalty? It happens all over the place. Political theft is increasing, which is constraining supplies and natural resources. On the demand side, unlike in the sclerotic West, which the prior speaker described so well, in the less sclerotic frontier markets, with some exceptions, people are becoming slowly more free. And as a consequence of their becoming slowly more free, they're becoming rapidly more rich. And they want to live like you do. The difference between now and 20 years ago is they're making more money, so they can afford to compete with you for the resources that sustain your lifestyle. It is important to note that as the bottom of the demographic pyramid gets more money, what they spend the money on is stuff that is made of stuff. We, those of us in the room, with maybe 1 or 2 exceptions, already have too much stuff. When we get more money, we buy some little Apple device, or we subscribe to, iTunes, or we buy services or something like that. But when poor people get more money, they increase the calorie counts in their family, they replace a visqueen shack with cinder block, they replace a thatch roof with steel. The fact is, when the bottom of the demographic pyramid gets more money, what they spend it on requires stuff. Is the bull market intact? Yes, because of supply reasons, and yes, because of demand reasons. It doesn't feel like a bull market, some people say. Past is, in this case, prologue. How many people here remember the great gold bull market of the 1970s? Show of hands, please. More of you do than that, come on. Okay. I see people with no hands up and no hair. That means they must have very poor memories. You remember that the gold price in that market went from $35 an ounce to $850 an ounce. At least some of us do, in my case fondly. I don't know how many of you remember in the middle of that market, $35 to $850, hell of a market. In the middle of that market, the gold price declined in 1975 from $210 or $211 an ounce to $100 an ounce. You had a 50% decline in the middle of the greatest secular bull market of my career. You can have these incredible cyclical down cycles in secular bull markets that don't wreck the market. We are in just such a decline now. Think about somebody who was right enough to be in the gold market, maybe not at the bottom, maybe they were in at $50. They rode the market up to $200. The market declined to $100. They got shaken out at $120. And 6 years later, the gold price went to $850. How would you feel about that? How would you feel about that? The thesis, remember, is that bear markets are best for bargains. And we just so happen, conveniently, to be in a bear market. One more thing while I'm at it, and I think Frank Holmes might have covered this. You read one of the criticisms about the resource market in terms of the fact that China has replaced the US as the world's mouth, and that China's growth has slowed to 7%. It might be 6%. It used to be 10%. I want you to think about this when you think about that statement. GDP in China in 30 years has gone from $400 per capita to almost $5,000 per capita. They have grown the base substantially. If you grow a larger base at 7% as opposed to a much smaller base at 10%, the aggregate growth is enormous. That resource utilization base is increasing faster with 7% GDP growth than it did 10 years ago with 10% GDP growth, because the base is so much larger. The second thing is it isn't constrained to China. Not too long ago, I was in Nicaragua for, I forget what time, but I've been there a few times. And the growth in the third poorest economy in the Western Hemisphere in the last 10 years has been absolutely staggering. This is happening around the world in frontier and emerging markets. The bottom of the demographic pyramid is getting wealthier, and as they get wealthier, the stuff they buy is made of stuff. It's very, very, very important, because in order for this market, the junior market, to rebound, there has to be a market for the stuff that this market, I was going to say produces, allegedly, occasionally produces. Let's talk about one more thing. Bullion. Because I think gold and silver, to some extent, at least psychologically, drive the junior market. The speaker before me, I think, said a lot about the competition that might be provided to bullion by the US dollar. I'm a citizen, sadly, in some senses, of the People's Republic of America, and I have to say that the United States is an increasingly inconvenient place to be an American. But rather than continue to denigrate that place, I also want to say that the US dollar, while it is the worst currency in the world, is only the worst currency in the world except all of the others. You will see in the news the race to the bottom, the Japanese deliberately devaluing their currency, the euro, of course, taking care of itself, and the US doing what it does. What that means simply is that while bullion may not go up in real terms, although I think it will go up in real terms, I think it's almost certain to go up in nominal terms. And I also need to say, personally, I hope the bullion price doesn't go up. I own a lot of bullion. I own gold, I own silver, I own platinum, I own palladium. I own a lot of bullion. And I'm here to tell you, although it's a digression from my speech, that I don't want the price to go up, because I own it all as catastrophe insurance. The thing that's going to make these bullion prices really, really, really go is a breakdown in society, a change in one's living standards. And my living standards are very, very good, thank you. I'm not looking for any increase in my bullion prices, but I'm afraid that I'm going to get that. Any of you who are underweight bullion, you don't have to buy it from Sprott, although of course we would appreciate it. You should own some bullion. It should be the bulwark of your portfolio. With every fiat currency in the world, every commonly accepted medium of exchange in the world being deliberately debased, bullion is the only commonly accepted medium of exchange that is simultaneously your asset but nobody else's liability, A, and it's the only medium of exchange in the world that doesn't have a domestic political constituency for devaluation. If the gold price goes up, it doesn't make people unemployed, whereas if the US dollar or the Canadian dollar or the euro or the yen go up, it raises the cost of domestic production and makes people unemployed. There is no domestic political constituency for the devaluation of bullion. In nominal terms, bullion will do well. Now let's talk about what you all came here to hear me talk about, which is the junior market. We are in a market. And by the way, you've heard me say this before, the market has started to bifurcate. Now, I believe that we will be in what is commonly regarded as a junior bear market for another 18 months to 2 years, a long time. Why do I believe that to be true? The first reason is that the excesses that have existed in this market really from 2002 to 2010 were so extraordinary that you can't wring them out in 2 years. The number of companies that were floated and raised $20 million that were run by butchers and bakers and candlestick makers was absolutely astonishing. At Sprott, we ran a couple of random statistical tests where we take 30 or 40 juniors, just completely at random, some of which sadly we owned. And we looked at their income statements and balance sheets for 5 years, and we found that some of these companies spent less than 25% of the money that was raised on exploration. The general and administrative expenditures in the junior sector relative to the exploration expenditures are an absolute scandal, an absolute scandal. I will tell you today in front of you that probably 70% of the companies on the TSX venture are worth zero. They're worth zero. And when people come to me and they say, Rick, Amalgamated Aardvark only has a market capitalization of $12 million, how low can it go? I'm forced to say, well, it could go to intrinsic value. It could ultimately sell for what it's worth. Well, it really couldn't because it's worth less than nothing. But it could go to zero. The fact that it was at $2 and now it's at 25 cents means that it was very overvalued at $2 and now it's only just overvalued at 25 cents because it's worth zero. How many of you remember 1991 and 1992 when Stockwatch used to publish these lists of companies that, quote, got the dot? That meant they were suspended, where you look for a bid and an ask, there's just a period. We used to call it in Vancouver, getting the dot. There's going to be a lot of companies this round that get the dot. They're going to go to zero, which is a wonderful, wonderful, wonderful thing. Unless, of course, you happen to own them, in which case it's a little less pleasant. My friend John Kaiser, about 6 months ago, published a survey, which I didn't independently verify, but John's a very good researcher, showing that 50 or 60% of the companies then, 6 months ago on the TSX venture, shared three common characteristics. They were selling below a quarter, they were selling substantially below their 52-week highs, a lot of unhappy shareholders, and they had less than 6 months worth of working capital. 6 months is over. The outlook for these guys raising money is bleak. What do? Time's tough, till's empty, you quit and leave. So there's going to be a lot of that in the sector. The sector will feel like it's going lower and lower and lower and lower because the flotsam and the jetsam, the companies in the sector that were worth nothing, will go to or at least approach their intrinsic value. But my suspicion is also that the best 5 or 10% of the companies in the sector have already bottomed as a group. It doesn't mean that some of them won't come off 20% more, but given what they've come off so far, 20%, while it's unpleasant, is also irrelevant. And as a statistical group, as a median or as a mean, my belief is that they have already bottomed. We are in a market right now, and we have been in a market for 12 months that rewards performance. We just haven't seen much. If you look back to 2012, how many people here remember the name GoldQuest? 6 cents to $2. Was that performance getting rewarded? Or was it a psychotic break to the upside? How about Reservoir Minerals? 26 cents to $3. How about Africa Oil? 80 cents to $10. This is a market that rewards performers, but the market hasn't delivered very many performers to reward. What will turn this market around? Let's talk about hope now. What will turn this market around? 4 things, perhaps 5. 1, there are more high-quality managements, more low-quality managements too, more high-quality managements in this market than there have ever been in the past. We have funded exploration generously for 10 years, generously. We have raised tens of billions of dollars. Most of it was wasted, it's true. Most of it went, in California parlance, to fast women and slow horses. But we raised so much money that they couldn't waste all of it. Some of it was well spent, and the fact that there was so much money around attracted more and better management teams to the sector, to the extent that there are more good management teams in place than there have ever been now. And this market, which took the bad stocks up indiscriminately with the good stocks, has taken the good stocks down indiscriminately with the bad stocks. So you have this wonderful situation where you have high quality managements at 70% off. The first reason why this market will do well in terms of the best companies in the sector is really simple. Because it's cheap. Because it's cheap. That's the first reason. High quality managements that are oversold. You can, yourself, you don't need a PhD, you don't need to be a geologist, you don't need even to be a Shylock, a lender like myself. You just need a memory. You need to look through companies that have people with them who have been serially successful, that have enough money in the treasury to survive the next 18 months, and these stocks will do well. They won't all do well, but a portfolio established of the very high quality management teams with the money to survive 12 to 18 months, all by itself, for no other reason that they're cheap, will do well. You can't say that in bull markets, but you can say it with absolute certainty in bear markets. The second thing is that these very, very, very low prices will beget takeovers. I was talking to a very good geologist this morning, a guy who is very, very, very full of himself and very confident in his exploration team. And he says, I can't afford to drill. Although drilling costs are off by half, I can't afford to drill because I can buy deposits for $2 million in the market that have seen $30 or $40 million of drilling done by other people. Why on earth would I take exploration risk when I can buy successful efforts for nickels on the dollar? What does this mean? It means that this is a market that's going to see mergers and acquisitions. Not because the selling side wants to sell, but rather because nobody will fund the selling side. The strong will survive. And M&A is good in every regard. It takes general and administrative expenses out of the system. It provides near-term capital gains for the people who were smart enough to buy the ones that get acquired. It adds hope and it adds liquidity. We are in an M&A cycle already that has been set up by these low prices. Second reason. Third reason, we are in a discovery cycle. Right now, we're in a discovery cycle. How many of you remember the early part and mid part of the 1980s? We spent the 1970s, that gold bull market, looking for gold. We spent 10 years and we didn't find any. We didn't find any. But after 10 years, after we'd been looking in Nevada for 10 years, after we'd been looking in Ontario for 10 years, after we'd been looking in West Africa for 10 years, we started finding gold and we found lots of it. Discovery cycles take a very long time and the application of a lot of capital, and we have spent both the time and the capital now. We are in the beginnings of a discovery cycle, and there is nothing like a discovery cycle to add hope, to add liquidity to the sector. Remember Arequipa, 30 cents to $30, 19 months. Remember Diamond Fields, $4 to $160. You know, this is really fun to be bullish for a change. I like these bear markets. I actually get to get up here and make you guys laugh. We are in a discovery cycle. The fourth reason is that the issuers are finally going to have to be rational. The issuers are finally going to have to be rational. They're going to have to raise capital from people like us on terms that are reasonable. They're going to come to me and say, Rick, I'd like to raise some money. Of course, I can't give you a full warrant, and I have to give you a short warrant, and I'm going to say to them, okay, I'll do that. I'm with you. It's a cheap market. I'll take a half warrant, but you got to take half options. And if you give me an 18-month warrant, you got to take an 18-month option, because options are just as dilutive as warrants. The fourth reason why you're going to make money in this market is because the issuers are going to be forced to be rational if they need to raise the capital to go forward. It's not going to be cheap, but it's going to be fair. And fair is something that we haven't seen in this market for 10 years. In summary, ladies and gentlemen, remember, markets work. Bear markets begat bull markets. It is the move from a bear market to a bull market that is where you make your money. The old adage is that you make money buying low or selling high. Does this feel low to you? Are you going to have something to sell if you don't buy something in the bear market? I don't think so. Ladies and gentlemen, thank you very much for your time and attention. I am in booth 1903. That's the Sprott booth right at the end of the aisle. I have an 11 o'clock workshop tomorrow where I'd like to talk to you about exploration stocks. Thank you very much for your time and attention. This is the time to start being aggressive. Thank you.